All right, Jason.Gray, the Jason.Gray Show. Let's talk about Jerome Powell puking on the market today. Yes, he did. All right, so he was speaking today, and boy, were they slamming him pretty hard today. Elizabeth Warren went after him. Senator Kennedy was going after him. It was fireworks today for sure. So this has changed my mind a little bit on a few things. So let's have a quick discussion. So I thought by March that was going to be their last rate increase, maybe one more after that. But the way it's going right now, this is what I think is going to happen. They're going to do a rate increase in March of a half basis point, so 50 basis points. I thought they were originally going to do a quarter. I really did. I didn't think they were going to go higher than that. But now with his information and how he's sort of saying he doesn't quite have control over things, I think they're going to go a total of 100 basis points over the next 3 meetings. So 50 basis points on this one, 25 basis points on the next one, and 25 basis points on the next one after that. Now, that leads into us talking about the CPI reports and the PPI reports that are going to roll out May 10th and 11th, which I still believe is a starting point of when I think things are going to start rolling over. We were all anticipating, or at least not we all, but I was anticipating that things would sort of stabilize. They would do these changes. The changes in the PPI and CPI reports would be a pivot for them to start lowering rates by the end of 2023. I think they're going to start lowering rates now all the way to 2024. Do I still think mortgage rates are going to decrease in the third or fourth quarter of 2023? Yes, I'm still leaning on the third quarter. I know I've been saying the end of the second quarter, early third quarter. Let's go middle to the end of third quarter now. I pushed it out a few months. That's going to hurt us a little bit going into the real estate market. Now, there's still a lack of inventory in the real estate market, so I don't know how bad it's going to hurt us. But at the end of the day, like I said, I think this is still a temporary deal. They just don't have control over the market very well. They're doing the best they can with the tools that they have, but he's really struggling. So let's talk about the stock market today. It lost almost 600 points today, rolled over really heavily through his speech. Not only that, but gold and silver prices went down dramatically. I think silver was down by 5 percentage points today. I think gold was down 1.5 or so. Then you take a look at crude oil prices, which were down to $77 a barrel, and it broke below the 100 and 200-day moving averages. So that's a big number there. As those commodity prices come down, like oil, all of our products that we get on a day in and day out basis is delivered through diesel trucks, right? They're being shipped everywhere. And if you can bring those costs down, that will bring inflation down as well. So let's talk about going forward again. I still think that May 10th, 11th date is that starting point that we're going to keep an eye out for. We're going to have a rocky road, though, over the next few months. Take a look at investments and treasury yields. It's going to be really hard for investors to take the risk on the stock market when they can get a 5, 6, 7, 8% yield or return on some bonds. Now, U.S. Treasury bonds on the 2-year note is going to be pushing that 5.5% range, maybe even 6%. That's a pretty big yield or return on your money for a short period of time. And as long as you don't think the U.S. government is going to default, then you should be okay. Now, we still have the debt ceiling that's outstanding out there that Congress still has to pass. Ultimately, do they always pass it? Yes. Will they default on the U.S. government? No. Will there be a lot of fireworks leading up to it? Yes. But it is what it is. All right, so let's talk about what else got slammed. Bitcoin got slammed today. We talked about the stock market. The NASDAQ got slammed. So did the S&P 500 as well. Let's talk about the commercial real estate market and the housing market. Let's talk about commercial real estate, because commercial real estate is really tied to where the prime rate is and where the treasury rates are at. That's more tied into anything else in regards to commercial real estate. Those commercial real estate investors, let it be office buildings or apartment buildings or whatnot, they are getting squeezed incredibly hard. So unlike mortgage rates are typically a 30-year fixed mortgage rate, a lot of these are based on prime and their notes, and they have to be re-upped all the time too. If they even have a fixed period, it's maybe only 5 years fixed. And so the commercial real estate market's a big struggle bus. Where I'm at here in my part of the country, the office buildings that are around me, I would have to say are probably 1/3 full for this little area or this little pocket I'm in, I would be hard pressed to invest in commercial real estate right now. Not financial advice, but I'm telling you, I'd be hard pressed to do it. Now, in regards to the residential market, I think if there's a good house at the right price for you, with the knowledge that you think mortgage rates are going to come down, I think you're okay to purchase right now. I think the downside risk is very small, and I think as soon as rates, again, get down into those mid 5% range, the market goes crazy. In my marketplace I'm in right now, we are getting multiple offers on a big chunk of the homes. I had clients make 3 offers in the last 24 hours. Every one of them got outbid, and mortgage rates are in the high 6s right now for a 30-year fixed mortgage, which shocks me, but it doesn't shock me because there's no inventory and people need to move. Most of these people are first-time home buyers or investors, and not a lot of people that are selling their houses and buying another house unless they're relocating to a different marketplace. So relocations, divorces, bankruptcies, first-time home buyers, and investors are what I'm seeing right now. So the market's super tight. This will be an interesting next 2 to 3 months, in my personal opinion. It's going to be choppy. Bear with this market. It'll be okay. But over the next couple months, just be cautious and careful. Be really safe on everything that you're doing, all right? Talk to you soon. Hope you enjoyed this video. Bye-bye.